What a wild day it has been in the US markets. We have seen multiple pieces of bad news on a single trading day, causing a cascade of sell orders without $64 billion in pension fund money boosting it back up. Apple was once the most valuable company, and it has now fallen by hundreds of billions of dollars, leading the major US markets down with it. Without resolution on the trade issues, this will continue. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening in the markets. I'm going to show you what's happening with Apple. We're going to talk about China. We are going to talk about the hedge funds holding these stocks. I have a lot to cover, so let's get into it right away. Right now, as I record this video, you can see that the major US markets are down into the red. Whether we're looking at the S&P, NASDAQ, and the Dow Jones, all of them have found themselves about 2% or more into the negative today. The market has been up and down over the last few weeks. We've seen this continued trend from October up into the new year now, and you are looking at a very weak market. Stimulus is not there any longer, and of course this will only get worse until there are resolutions to the top issues. Today we're going to focus mostly on Apple. You can see that there had been articles like this written in every major newspaper. Dow drops more than 500 points on Apple plunge, rising fears of an economic slowdown. That really led the charge, of course, today. There are many more things like this article here. Apple tanks 10% on pace for its biggest single day loss in 6 years. This is another one that we need to understand why it's really happening. Is this because of the factors you're seeing in the news, or is this really an issue when stocks become overvalued in the first place? The company lost about $450 billion in market value since its peak of about $1.1 trillion last year. So the amount that it has lost is bigger than most companies. That is huge, to say the least. Apple expects its revenue for the fiscal first quarter to be as much as $9 billion lower than previous projections. So to give you an idea of what the price looks like right now, it is down just under 10%. We're looking at a stock price of $143. If I show you, this is the 1 month chart. You can see how it looks over the past 5 days and the drop off overnight as it reported this information. As I record this video, the market cap is at $684 billion and it's due to fall. We'll see how far it goes. What was interesting was that just prior to this, every analyst was saying buy, buy, buy. And no matter how far this stock falls, it just makes more analysts want to buy. And why? Because Warren Buffett owns so much of it. That's their reasoning over and over and over again, and it's ridiculous. They don't even have their own thoughts in their own minds. They simply chase the wave, and it's a big mistake. Okay, so you could see all of this, and then suddenly in the morning everything changed, and these analysts, a few of them, started to turn over and say, okay, just hold, don't buy anymore, just hold. Or maybe we're gonna bring our price target down, so we're not gonna say it's gonna be $300. We're gonna suggest $250, $260, and you see all of these different projections that they've made, and it's quite hilarious. So after the close yesterday, Apple cut its sales forecast for its quarter ending in December, citing slowing iPhone sales in China. I talked about this already. Then the stock came down in overnight trading, and then of course that was spilling into the morning, and you see how it is right now. People are looking for a January rally effect as they place bets for the new year. Apple puts a bit of sour tone on that. It raises concerns about whether the current estimates for the quarter are too high. This is obviously a problem as you see the market caps of all these big institutions falling, but not just a small amount. We are talking about mass quantities are just falling off of the balance sheets of these corporations. Biggest losers. Hedge funds miss on the Apple wagers. You're looking at all of these different hedge funds and the value of the shares as of September 30th and the value today, and you compare the two of those and you can see it makes a big difference with their prices falling so far and so fast. So that just gives you an idea showing you that. And then we have Mark Zuckerberg from Facebook, halts stock sales as Facebook shares tumble. So essentially, Zuckerberg said that he would sell a certain amount of shares. I believe it says in here that he was going to sell between 35 and 75 million shares. He thought that this would be done over an 18-month period, and he wanted to be able to do this to fund a new initiative that he has. But as the prices have fallen now 38% from their peak right here at the bottom paragraph, you can see that he has actually now decided to stop, put a halt to that, and hopefully, I guess, think that they will come back up. Maybe he won't even sell any more shares, so we'll see. I'm going to track this, of course. Insiders have been selling billions and billions of dollars of tech shares over the last few years. That has been a very big issue for all of these buybacks that have been taking place. You're seeing the buyback happen and then the insider selling immediately after once the stock price is boosted. There's obviously insider selling happening. We've documented that. They're not even hiding it, of course, but this is the information that generally is not really understood by the mainstream media, by the analysts that are really recommending these type of stocks. In connection with that, you see this article, airline stocks crater after Delta issues slightly lower revenue growth outlook. This is just another industry that's getting beaten as a result of what we are seeing with all of the other sectors at this time. The PMI has fallen as well. When you see manufacturing declining, that is worrisome for a lot of individuals, not just with the stocks that are directly connected to this, but of course the corporations that are involved in that. The businesses that do this on a daily basis require constant and never-ending growth. But as soon as there's a slowdown, you start to have layoffs, and then of course people are unable to buy what they need to. That causes a ripple effect and the economy slows down as a result. This is the manufacturing monthly change going back to the levels we haven't seen since the financial crisis. Yet another indicator falling to this degree. Flash crash hits the currency markets as financial volatility intensifies. This actually rose by 4% in a sudden move. That is not possible in reality. And what they're trying to suggest was that this is because of Apple coming down. This is because of the trade issues. They're trying to make all of these excuses, but of course, they're not looking at the underlying reason, and that is computer algorithms. They all trade on the information at the exact same moment, and that causes huge spikes upward or downward. And of course, this didn't affect just Japan's currency. This also affected others as well. There was a whole bunch of flash crashes that occurred at the exact same time. That's computer algorithms for you. And to finish the video off, China annual auto sales fall for the first time in about 2 decades, with more pain on the way. Auto sales in China fell 3% in 2018, the first decline in about 2 decades. This tells you what's happening in China today. There is a slowdown. We can see that with the sales of homes there and the amount of vacancy that are currently in those homes. There are a lot of reasons today to be able to realize that things aren't the way they used to be, okay? This isn't 2017 anymore. We're looking at a time frame in which we have to expect weaker growth and less demand, and that's just the way it's going to be unless we have QE4. There's actually a lot of expectations for a rate cut from the Federal Reserve coming up in March. We'll see if they actually do so. I'm not really holding my breath on that one, but we'll have to take it for what it is. This is really the beginning of something new. This started at the beginning of October and has continued on until today. They need the trade issues to be resolved. If that gets resolved and stocks climb higher, the Federal Reserve has even more reason to increase interest rates. So watch out either way. They can't win either way. So I'm going to finish the video there. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. So I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, the important data you need to know, everything from the foundation, the history, the asset classes, how to make money, how to actually save on taxes, and so much more. Check this out at the link in the description if you want the audiobook version that's available at themoneygps.com. I just wanted to let you know very quickly, if you had a problem with the audiobook, in downloading it, in listening to it, please let me know. You can do so by emailing my support email address simply at support@themoneygps.com. There have been a few people who were unable to get it for whatever reason, and I want to make sure that you have that MP3 file so you can listen to it, re-listen to it over and over again. You can put it on your phone to have, you can burn it to a CD, whatever you want to do, so that to make sure that you have it permanently. I want you to have that. As a Canadian, I was not able to sell on Audible or iTunes or any of these other services, so I had to do it myself, and I just put it on a website that allowed people to download it from there. So that's the way I did. So if you have a problem, again, support@themoneygps.com, and I can rectify that for you. I apologize for any problems that may have happened over the last little while since I released it. I know that I've gotten some people letting me know, but I'm wondering if there are people out there who just never let me know about it. So definitely contact me if you have an issue with it. Thank you.